All right, beautiful. All right, well, now that we're here on GBP JPY, Forex.com is our broker on the 1 daily chart. I'm going to teach you guys how to implement indicators. So I'm going to delete all the ones I currently have right now. If you go to the top on the left, you'll notice that you have the name of the currency, the time frame it's on, the type of chart that you're looking at. You'll see that you have a compare symbol. I honestly don't use it myself, so I can't tell you what compare is used for, but the main reason I'm bringing it up is because we're here at indicators, okay? Once you do that, you'll have the whole list available to you here. So some people may know BRS strategy from the IML TV. So you could be able to search that with just B, which is Bollinger Bands, and you could just search that up and it'll pop up here. So the indicators that I personally use though, I don't use BRS strategy unless I'm scalping. I'm a swing and intraday trader. I do sometimes scalp and I do sometimes position trade. So what that means is I essentially make my money within an hour to within 2 weeks at most because I'm intraday and swing, which means I'm a longer time frame type of trader. Now, when you go here to the indicators that I use, I only really use 2. I'm currently in the process of learning a 3rd one, but it's also part of the same tool. So when you go here to indicators, the first one that I recommend to everyone is EMA. That's known as Moving Average Exponential. I'm recording it, yeah. I'm on EMA, and that's Moving Average Exponential. So when you do that, you click that over here to the right, and it'll implement one of those lines you see in the back. And that is your exponential moving average. Once you've done that, okay, you're going to go back to the search bar, delete the E, and just have regular MA. So it's going to come up as MA. Once you have that, the regular, well, it's not called regular, but it just says moving average. You're going to add one of those, okay? So you click it, and it'll automatically add that as well. Now you exit out of that. You notice how we have 2 new lines implemented into our chart. These are our moving averages, okay? Now what I want you to do when you're done with that is you're going to go here to where the moving averages are implemented, which are right below the name of the currency and the time frame that it's on. And you'll notice you have 4 symbols. You have the show and the hide symbol, which if you click it, the lines disappear and you can keep them still there on the chart, but they just literally are not visible. Make sure that they're both visible, which means the eye icon is not highlighted. Once you do that, you go to the little gear, which is format. You open up that little gear and it'll pop up this little menu here for you. You see where it says MA and he's got a little nice little color. So I'm very color coded myself. I like to be organized. So you guys don't have to do it like me, but I have my EMA as red, okay? I make the line thickness slightly bigger so I can be able to see it more. So I usually leave it at the 2 or the 3. I think 3 is a little too thick, so I leave it at 2. Okay, you don't have to worry about whether it says line, price line, precision, or scale. That's all good and dandy there. Go to inputs. After you've left the style tab, you're going to go to inputs, and you're going to change the length from 9 to 7. You're going to leave the sources closed, and you're going to leave the offset as 0. Once you're done with that, you click OK. See how my line moved? And it's currently red. Now that one's on point. That's my exponential moving average. Now I want you guys to do the same thing for your regular moving average, which is right below it. You click the little gear to format it, okay? Go to the style. I changed my style to blue. For this one, I like clashing colors that conflict. So I also add that thickness to the line. I like everything thick in my life. Sorry, that was intended to be a joke, but it was totally bad the tone. So length, 21, 21 days. And the reason why I picked 21 days is because, oh, by the way, the length actually indicates how many days this is. So this does some complex algebra that everyone dropped out of the class to not really care about. So we don't really worry about what it is. But the length essentially works the same way as days, okay? So have you previously had 7, that represents 7 days. The reason why I picked 7 days is because that's 1 solid week, okay? The reason why I picked 21 days is because that represents 3 solid weeks. If you notice, though, not every month has the same amount of days. So the reason why I didn't pick a 1-month time frame is that I wouldn't want to have to switch from 28 to 29 to 30 to 31, however many days is the average days. You can't put 29.8 as the length. So I leave it nice, short, and sweet. To represent a month, I keep it at 3 weeks, which is 21 days. Once you do that, you have it. You click OK. And there you go, you have your moving averages. Now these are the only 2 indicators that I personally use for most of my analysis, okay? And I'll explain what these things do. These moving averages represent the price, like I said, at this certain time frame. It is an average of those prices, so it generally meets somewhere in the middle of where the chart is supposed to be according to that many days. what I use them for. So if you notice here, every time that the blue and the red lines cross each other, the markets go in the opposite direction. And what I mean by that is you see here in the first one to the left, I'll even do a nice little circle. Right here, the red and the blue lines crossed over at that point and then began to go up, okay? And you notice that the red and blue lines continue to not be crossed for quite some time, continuing this little uptrend right here, okay? Once it hits this point and the blue and the red lines cross once more, you notice that the chart begins to go down. Can everyone see that? Yeah? See some head nods? All right, cool. Everyone can see that now that it's crossed over, the charts are going back down. And then we have another crossover, a third one right here currently happening. Well, not currently happening, but previously just happened. And now is indicating that the markets are going to start going back up. So one of the reasons that we use these moving averages is that when they tend to cross over, they tend to make the markets go in the opposite direction. All right? Now, this is not the only thing that you're going to utilize in order to realize when something is going to go the opposite direction. If you notice, going back, you know what I'm saying, because hindsight is 20/20, after you do the crossover, as well as putting the candlesticks go above or below the lines. So as of right here, when it does the crossover, the candles, if you notice, most of them are above the red and the blue lines. And every time that the candles tend to go the opposite direction, the blue and the red lines almost cross over at this point, but essentially don't. And it continues that uptrend until it crosses over. And that crossover, with the addition of the fact that the candles are currently below it, means that it's going to reverse. So you literally see how after it's done that the candles started going below it as well as the crossover. They all stayed below the red and the blue line until this next crossover over here. And then now, as of right now, it's been currently above both of these lines. So that would indicate that it's continuing to go strong up. Did everyone get that? Or should I go over that one more time? All right, we'll go over it one more time just in case, just briefly. When the candles are above it, above both lines, that means that it has a strong strength of going up. It's strong going up. When the candles are below both lines, that means it has strength going down. And that applies to like literally anywhere. You can look at this on any time frame. You can look at this on any chart. The moving averages stay on your chart. As long as you implement them on one chart, they go to all the charts. And then once you have those crossovers as well as those candles going above or below them, then that's when you know a reversal. Sorry, that's one of the reasons that you would assume a reversal is going to be coming. Now, that's just for the moving averages. However, we can delete this, and I'll show you guys how to implement another strategy or more indicators. So you go to the indicators, correct? And this is what I use to scalp, which is known as BRS strategy. You can watch more about that on the IML TV. I learned it from Lee Allen, who is the name of the instructor, in case you wanted to catch her IML TV. So what she does is that you can essentially have your own web analyzer, folks, by using this strategy. I'll teach you the 3 things that the web analyzer personally puts on your chart for you, okay? The first one being the indicator of Bollinger Bands. That's B-O-L-L-I-N-G-E-R. Once you put that Bollinger, you see that Bollinger Bands comes up. So you can click that Bollinger Bands, and then boom, first thing that's already popped up is the Bollinger Bands in the background. For the settings of the Bollinger Bands, you want to have it at the length of 20 and the standard deviation of 2. Okay? Length of 20, standard deviation of 2. Anytime you see any indicator with length, it represents the amount of days. So once you got that Bollinger Band, you're going to go back to the indicators and you're going to add RSI. Okay, that's what you're going to type up. It's going to come up as Relative Strength Index. So that's what I'm going to click here. And boom, there you go. Now I got the RSI. Now my RSI, I have mine currently at 9. So you want your length, the length of the RSI at 9. You go to the format, you see how it says 9 there. You can leave that as 9, all right? Now you're going to go to your third indicator, and you're going to go to STOCHAS, and there you go. You don't even have to type it all. Once you put STO, it normally pops up as the first one. It's known as Stochastic, okay? This is what the BRS strategy stands for. The B for Bollinger, the R for RSI, and the S for stochastic. So once you do that, you'll be able to put that in, and there you go. Now, even though my background is black, I literally have the web analyzer on my trading view as we speak. It just does not make the nice cha-ching sound for a good entry point. Essentially, I need you guys to be able to make your own cha-chings. You know what I'm saying? So the way that we read these, okay, is that the way that I was taught is that the candles need to be outside of the bands, okay, for that to indicate that something was going to be occurring in the opposite direction, outside of the bands. So as you see right here, this one wick has been currently outside of the bands. Now you can have this aligned right here with your pointer. You can scroll down because you wanted to keep it aligned, and you could check what's going on in the RSI, which is currently in this little mini chart here. All right, and you see that it's currently above this little checkered line. When it's above this checkered line but facing downwards, that means it's going in for a buy in terms of, going in for a sell in terms of strength. This is for the RSI here, folks. I'll even bring this up a little bit bigger. This is the RSI right here. Okay, so you see how at this point that it was above in the Bollinger bands, we also had the RSI currently leave that purple area. Okay, so that indicates that it's going to be coming in for that sell position really soon. Now, another one that we use is the stochastic, so we can drag up the stochastic here. And if we notice at that same point, we also have the stochastic leaving that purple zone. So those are three indications that the markets are about to reverse. And if you notice that the markets have been going up for quite some time, and now that indication on the RSI, the Bollinger bands, and the stochastic are telling us that it's due to go back down for a little bit. Now this strategy, like I said, is primarily, I use it for scalping. So obviously we're on the daily chart. This is going to be a little bit different. So I'm going to change the time frame that I'm on. I'm going to go from day to 5 minutes. And there you go. So this is what it would look like if you were trying to, for example, scalp this. As of right now, this would probably be something that wouldn't pop up as a cha-ching on your web analyzer for the simple fact that this does not meet the requirements for the web analyzer to give you the said signal. And the requirements are those three things that I listed. The Bollinger bands being penetrated, okay? The RSI and the stochastic being outside of those purple zones. And it doesn't have to be purple. Yours may be a different color than mine, but the point is they have to be outside of those zones. So if the lines are above those zones, you're going in for sells because you expect it to go back down into the purple, okay? And if those lines are below the purple zones, then you're expecting it to go for a buy into the purple. Essentially, these RSI and the stochastic want to be in the purple. So if you see them ever leaving the purple area, you can expect it to go back into it. All right, now this is for the BRS strategy, and like I said, this is the three tools that your web analyzer essentially utilizes, okay? If you master these things without even having to go to the web analyzer, you can go back onto the web analyzer and literally you can become a master web analyzer user, okay? So this is what I tend to do sometimes because, now, like I said, it always doesn't make the signals for me, so I'll use these three things and then find my own signals looking throughout the charts. Now to go back into the way that I trade, I just thought I should bring that up nicely. I'm going to bring back my indicators. I'll do this all really quick. No, sorry, EMA is 7. Sorry guys, I'm just going to do this briefly. Hopefully you guys still have it set up like this. All right. Now what I want to teach you guys is how to identify trends. Now, like I said, I'm a long-term trader, so I analyze stuff from a longer time frame. The time frame that I'm choosing to analyze this is going to be on the daily. We're still on GBP JPY, okay? Now, the way that you guys identify trends, right, is not just by looking at the graph and seeing, oh, it's going up, oh, it's going down. So these things they can be fake outs. They can be reversals, pullbacks, whatever type of terminology you learned in the academy can be seen in these charts, absolutely. But what you want to do is you're going to go here to the left. By the way, I actually didn't even properly teach you guys how to use TradingView. So I'm going to explain these buttons all here to the left first before I continue further with identifying trends. So originally when you get over here, you're going to have a cross, right? Which is what you see before you on the screen. You see I have a cross icon. You can click to the right of that and make that either a dot, an arrow, or an eraser. I personally use the cross. It's all personal preference. After you're done with that little first symbol on your left, you're going to go to the second one, and you'll have the trend line icon. On the trend line icon, you'll notice there's a little arrow to the right of that right here. I don't know if you guys can see it. I can't zoom in on the actual trading view. So on the next of the trend line icon, you're going to click that and you'll have more options pop up. Every single symbol on TradingView has this little arrow to have you pull up more options. I'm going to explain all the options. So as of right now, what I use here is I use trend line. You can click the star to make it your favorite. Okay, so I use trend line here. I use horizontal line. I use arrows. It's good, bro. So I use trend lines, I use horizontal lines, and I use arrows. The trend lines, like I said, they're pretty self-explanatory. They're going to basically be those lines that you draw diagonally or left and right to make your trends be identifiable to you. You want to be able to see them easily, okay? You can also do trend angle. I haven't personally used it, so I can't tell you what its utility is, okay? I'm going to just continue on to horizontal line. The reason why I use horizontal lines, some people may use a horizontal line, for example, to possibly put in an entry point. And so there you go. That's how you would utilize that. You just click the little icon, and it'll literally make it for you. So you can use that to make an entry point, and you can use this to make key levels if you guys are familiar with what that is. If not, I can bring that up another training. You could also use this for support and resistance, and you can use this for that's generally about it. Actually, you're just generally using it for support resistance, the key levels, and entry points. Or like, you can use this for Fibonacci as well. Absolutely, anything that makes this clearer for you guys essentially is what you want to be able to use. So once you're done with the horizontal lines there, we're going to continue on to the next icons. Horizontal ray basically is similar to a horizontal line, but it only makes the line to the right of the point that you click, okay? That's like unimportant geometry stuff that we all like skipped in class, so we don't have to worry about the ray. And the vertical line, you know, it's pretty self-explanatory. It's just going up and down as opposed to left and right. Now, the reason why I like the arrows, though, is because this is what I'm going to use in order to identify our trends. I'm going to use these arrows in order to draw out where I think the charts are going to be going. So you can see right here, I can draw the arrow, and you're going to pick the first point where we're going to start drawing your arrow, and then use the second point, drag it out, and then put it where you're going to draw your next, where you think it's going to go. So as of right now, I have this one arrow saying that I'm starting at this point, and I think that it's going to go to this point. Yeah, go ahead. So once you have that set up, you can generally use these arrows to kind of put every time it goes up and down. So I'm going to put it from here to here. I'll even zoom in so you guys can see what I'm talking about. So I'll use this arrow from here because I'm going to try to identify trends. The way that you identify trends is from highs to highs and from lows to lows. Now, what I mean by that, when you're in a downtrend, you're going to start from a really, really high point all the way to the left, okay? And you're going to notice that every high point on the graph is going to go lower and lower. So what that means is you're going to have higher lows. You guys have probably heard that in the academy. And they love to talk about the higher lows and the lower highs and all that. And that's exactly what you're going to be using. So you're going to be using these arrows to kind of like give you a visual direction of where you think all these ups and downs are going to be going. So like I said, I'm going to start here to the left where it's the highest point on my graph thus far. And I'm going to extend that arrow to the lowest point of the graph thus far. Once I do that, I'm going to click another arrow. I'm going to start where I ended on the last arrow. And I'm going to bring that out to go upwards to that next high. So as you see right here, I got this high over here to the left, going down to this low, and then identified the next high, which is the next highest point over here. Now I'm going to draw another arrow from the highest point to the next lowest point. So if you see right here, I got a high, I got a low, another high, and another low. Now that shows me that at that point in time, the graph was going down because the next point that I saw on the graph was lower than the previous point. Now, luckily, this graph is currently showing us that it's got a little bit of an uptrend, so I can be able to show you both examples on the same graph. Now, I'm going to get the same arrow tool, correct? I'm going to extend it from my lowest point, okay? Because when you're in an uptrend, you're going to start from the lowest point. Once you do that, you're going to extend that out to where the high is, okay? So this is how you identify highs. You could also have extended it out this way if you'd like. It just depends on the type of time frame that you would like to identify these arrows. You're not wrong in either of those selections, okay, guys? I wanted to stress that enough. So you guys can essentially have the arrow drag out to here, which is, I feel, more comfortable right there. And then you're going to pick that high and then identify the next low, okay? And the reason why we know that this is currently going to be making uptrends is because if you notice at this high right here to the left where I started my first arrow, you know what I'm saying? It extended out to this one down here, this low, which is my highest low. And then I had a lower high over here, okay? And then I had another low high over here. So these three highs indicate that it's downtrending. However, if you notice, the lows stopped after the second one. So this was our original low, and this is our second low. But the third low, which is this one right here, is not below, which means that that downtrend is over, okay? That downtrend is currently over. Now this trend looks to be uptrending. And another confirmation that we have that it's going to start going uptrending, besides the fact that we have these arrows showing us that it's going in the opposite direction, is I remember what I brought you guys earlier, the moving averages. These moving averages crossed over at this point, and the candlesticks are currently above both of those lines. That's three things on the checklist that tell us that this is starting to go up. Could everyone agree with that? If everyone could agree with that, type of one in the chat box or whatever. I need to be more interactive with you guys, make sure you guys are understanding this. So if you guys can agree with what I'm saying or see what I'm saying, type of one. If I don't get any types, then I'm going to go over that briefly again, just to make sure. But if not, then I can continue. All right. So as of right now, I'm going to continue drawing these arrows until someone says something there. And so this low is higher than the previous low, and that's where I saw that this downtrend was done and the uptrend had begun. Okay. Now I'm going to identify the next low. So beside this arrow point right here, we notice that the next low we have is actually right here, and that low is higher than this one, which means that this is currently uptrending right there according to the lows. Now let's confirm it with some highs, right? So this is our new high over here. Then we have a second high, which is slightly above it. And then we have a third high, which is even above that one. And to go take this even further beyond, we have a fourth low that's higher and a fourth high that's higher. Oh, wow, I already cut. Oh, everybody got ones popping up. Beautiful. Oh, so sorry. Hold on. Are you recording? Yes, I'm recording. 21M day has gray little dots running through it. You have to change from checkered line to line. When they cross, they go in the opposite direction. That's usually the case, yes. On my phone, I could put RSI on top of the stochastic. Can I do that on my laptop too? Yes, you can. You could put RSI and stochastic whichever place you want. They're just dragging and dropping. Stochastic, yes, I keep at 20, 5, and 5. Those are the settings for my stochastic. I'm so sorry, guys. I actually did not even peep that the group chat had you guys been talking on it. So I apologize. I didn't answer those questions previously. So now you see right here, to continue the trend that I was talking about, this is currently uptrending, correct? Everyone can see that? All right, once you identify the trend, you can be able to draw your trend lines, all right? So now you go back to that same tool where we got our arrows, you're gonna click trend line, all right? In an uptrend, you're gonna start like exactly how you started with your arrows. You're gonna start at the bottommost point. So I'm gonna start from down here, okay? And the way that you draw trend lines, folks, is that you want that line to touch, not go through, to touch as many of the tips of the candlesticks as you can. The more that it touches the tips of those candlesticks, the more accurate your trend line will be. So if you see right here, I can draw this trend line right here, and it goes through 3 different points. So this would confirm that my trend line is decently accurate on this time frame right now. I'm gonna change this to white so everyone can see that more. Okay, and you can extend that as further out as you feel is fit. Just you got to make sure that you have the tips of the wicks or the tips of the candlesticks touching each other, and the more times it touches, the more accurate your trend line is. So in an uptrend, you're gonna start from the bottom and you work your way up. Okay, in a downtrend, you're gonna start from the top and work your way down. Okay, and you're going to connect lows to lows and highs to highs. So I'm going to delete all these arrows so it's less confusing for everybody. Ooh, sorry. All right, once you do that, you'll be able to draw what's known as a counter trend line, okay? So the counter trend line is the line that you guys normally see. If you guys ever see any triangles on anyone's charts, myself included, it's a trend line versus the counter trend line. Now, the reason why we draw this is because when one trend line gets broken, we generally expect the trade to go in the opposite direction. So what I mean by that is that the trend line indicates that this is going up for a buy. However, if the candles were to go below this line, I would say the trend has been broken, okay? And therefore, I would probably take the opposite position that I originally thought. So since we say that this is going up, we want to take buys, correct? If it continues to have the candles break below the trend line, that would imply that we're going in for a sell because the markets have changed their trend. They went against the trend line. Okay? Now, the reason why we draw the counter trend line is because we want to be able to see it break through certain areas, and then that would give us ideal entry positions. So as of right now, you see right here, it's going in for a buy for GBP, JPY, but maybe you don't know how to enter it correctly. So you want to ideally see where it would go. So you're going to start, since it's on the counter trend, you want to be going your lines in the opposite direction. So since this is going in an uptrend, I'm going to have my counter trend line going down, okay? And the way that you do it is that you start from the highest point. So as of right here, this was the original trend of the downtrend previously. So you can use this as the newest high for this trend line, and you extend it out, like I said, make sure it touches those wicks, and boom, there you go. Now you got that nice little triangle that I was telling you guys about. And there we go. Decently pretty. Now, guys, you do not need to have it your trend lines exactly on the tip of the wicks. I'm like borderline OCD with this, so like that's why mine are like almost pinpoint precise. But these trend lines are not precise lines, okay? These lines are more like zones. I need everyone to remember that. Anytime you draw any type of lines, these are general areas or zones. Do not so much focus that like, oh, this little wick broke through that line. That is what's known as a fake out. Okay, wicks do that to you on purpose. Makes you guys think that it's going to go through the trend line, but those are just fake outs. Okay, you want to focus on what the candle as the whole body is doing against those trend lines. So for example, right here, I expect to continue to go up, and the reason why is because one, the trend line is telling me that it's going up anyway. Okay, the moving averages crossed over here and have not crossed over since then. Okay, and the candles are all above both of those blue and the red lines as well. Now, where would I get a good entry point? Everyone's probably asking, right? Now, this is not even enough to technically mark up a chart. I have a lot more on my checklist, but since I'm short for time, I'm going to give a little bit, as much as I can give, okay? So once we have these trend lines broken through, let's say with an arrow, I'm going to draw with an arrow so you guys can see. Bring my arrow out. Say it breaks through, goes above it, right? You would probably like, oh yeah, I want to catch a buy, but I'm a patient trader, okay? We don't predict the markets, we react to them, okay? So what you want to do is you want it to basically play out to your hand. You want to get the most benefit, right? And if you're taking a buy, the best part to get in a buy would be lower than higher. You know what I'm saying? You don't want to place a buy up here, it go back down, you see those negatives, you get a little bit upset, you pull out thinking, hey man, it's probably not going to continue to go up. But essentially what it's probably going to do once it breaks through these trend lines is what it's known as a retest, okay? So you see how it breaks through right there. It'll probably come back to touch that line, and then it'll continue the direction that it ultimately wanted to go. Now, this is not rocket science. This is not for sure. This is unfortunately a little bit of prediction. Okay. Now, the reason why I bring this up was because I was telling you earlier we don't predict, we react. All right. So even though this is my prediction, I'm waiting for the reaction at this point for me to essentially take my position, okay? So if I want to take a buy, I want to wait for that retest. And what I mean by that is if it does not hit a certain point of your graph 2 times, then there has not been a retest, okay? That's hit a certain point of your graph 2 times. Now this, I'm going to draw a little circle here to show you what part of the graph that I want that retest to occur. Right there. I don't know if you guys can see my circle or inside the circle. Yeah, it's 1 o'clock in the morning. I don't know how long FIU is going to be up. So right there, we're waiting for that retest in this little area. And if it does not continue to go below my trend lines, then I'm going to take the buy. Okay? Did everybody get that? So if it goes up here and then it does not go past it back down, then that means this is going to bounce off of this trend line and then continue going up. Okay? So that would be what I would take for a buy position, would be right about here, anywhere in this little zone. Like I said, these lines are zones. You may see a little bit of a fake out and it'll probably go through it and then ultimately go back up, which is why we react. You want to wait for that to play out for you, okay? All right, we got 2 minutes left. All right, we've identified trends. I showed you how to draw trend lines, and I showed you briefly how to get into retest or good entry points. Now, this is all in the daily time frame. Because I'm a longer term trader, this is generally where I operate. However, my entry points are not done on the daily time frame. I actually go into the 15-minute time frame. So what I do is I apply that same strategy about the trend as well as the moving averages here in order to find an ideal entry point. So I'm expecting these moving averages to probably cross over one more time and continue, like, you know what I'm saying, do a little bit of a down or what's known as a pullback. Okay, I'm going to catch that pullback to go in the direction that I think it's going to go. As of right now, this is a very strong uptrend on any time frame that we've been looking at it. So if we have any sells for GBP, JPY, I would not keep them there for too long. Let me see if I actually do. I actually have sells for both GBP, JPY. I'm actually negative 600 right now. So there you go. See what happens when we just, you know, just let that stuff sit there and we don't analyze it. And I recommend and I encourage everyone to any signal you ever get to just kind of come on TradingView and you know, analyze it yourself. Because essentially the whole reason that we joined all this is to become independent people. You do have the community to back you up and to give you support as well. But essentially you do want to learn the skill set because, you know what I'm saying? We're not going to always be around. We're not going to always be able to provide signals. Not every signal wins. We don't want to receive any negative feedback when we do give out a signal that doesn't go our way. We are still learning, you know what I'm saying? And we're still earning. So let's do this all together and let's analyze and keep an eye out for each other. All right. We have less than a minute. If anyone would like a part 2, I'll be able to host some. I'll be able to host one in a few minutes. I'll provide a new link. But if not, we can continue this again on Tuesday. I hope you guys learned enough of the basics to keep you afloat for now. If you have any inquiries or whatever, feel free to DM me. I'm available for anybody who's not on my team or is on my team. I'm available for anybody.